Hello friends, welcome to my YouTube channel Simply Stocks, and today I'm going to talk about the new age listings or the recent listings that have taken place in the market, some of the best and the worst of them, and let's understand about their business and which stocks are better to buy at these corrected levels and which stocks are an avoid. So let's get started. First of all, disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about these new age listings, a small request that kindly support me on Patreon. And once you do that, it helps me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts that I put up from time to time. And also, if you can pay $100 upfront, you get 1 year access by paying for 10 months. The first in this list is a Naica. It has a strong online women fashion brand and it has a very strong presence across India. And this is a culture that is beginning to take place even in the third tier, second and third tier cities that women are ordering online and buying products from the site. It is a rare unicorn listing which has been profitable and has been doing well. Although over the last 2 quarters, the company hasn't done that well and the profits have dipped, but that is because their advertising expense has increased and they are increasing their market share, gaining more market share from other players and trying to establish their brands. So valuations on listing was stretched. Currently it has dipped around from 2400 at the top to 1300, nearly dipped 50% from the top. I think it went to 2600 even, and is currently trading at 12 times earnings. Sales growth has been 40% continuously year on year for many years in terms of sales. So growth on the top line has been tremendous, and that is why it was valued at such a level that it was valued at. But now it is currently trading at 12 times earnings, which is very reasonable compared to earning at 25-30 times earnings. So if you take FY23 earnings, then we are looking at something like 5,400, 5,500 crores. So it is trading very much around 12 times those earnings, and it has corrected 50% from a top. So it has a very good potential for the decade and something that can be accumulated between this 1200 to 1500 band looks attractive at these levels. The second in this list that I brought for you is Zomato. It is a leading online food delivery app, and we virtually all of us know about it. This app has become a household name over the last 2 years, especially after the pandemic. It has become something like you can say a food that everybody wants to order from, and it has become a necessity at that point of time. Sales are growing very strongly, 80 to 100% sales growth it has shown year on year, but losses have expanded, although losses curtailed a little bit, but still losses have expanded a lot, and gross margins are shrinking as well. So nothing looks good, and at this point of time with the inflation set to increase after 10th of this month, I think Zomato will feel the brunt of it, and that is why the correction has taken place. So I don't see a recovery very soon on the stock. And remember that even when the stock is halved from the top, it is expensive on the sales basis as well. And on that front, if it is not profitable and there are losses which are going to expand with inflation, with high cost pressures of oil, petrol, etc., because it is more or less a delivery app, so it looks extremely expensive and it is an avoid even here. Maybe around levels of 50, 55 could be looked at, but I would still avoid. I think there are better companies to invest into. The third in this list is Vedant Fashion. Now, this is a very recent listing, and this is the brand of Manyavar is owned by Vedant Fashion. It is a top wedding fashion clothing, you can say, company. exceptional profit margins of over 40%. It has been seen between 45 to 50%, and valuations was stretched at the time when the you can say listing came in, and the stock went up to as high as 950, I think 950, 960, trading at 100 times earnings. I think it would be better to buy this stock around 700 levels, 650 to 700. It has corrected from the top, but I think another 10-15% from current levels would be very good levels to buy into. It has a very good long term mode. It is just that valuations are stretched, the company, the profitability, everything is pretty good, and numbers are set to improve from FY23 onwards as India opens up. Remember, India is a country of weddings, and things will open up from March, April onward. This is a very good opening up trade as well. But I feel in this correction, this could go down another 15% from here. It could very well go down below 700, and those will be very good levels to get into. Another top class company to hold over a 5 to 10 year period. And the next one in my list is Nasara Tech. Now, this is the only listed gaming play that is available at the moment in a sector which is growing exponentially. We all know about how gaming and online gaming is taking shape. But unfortunately, the main players in this online gaming space is not listed. They are not listed as something like a Dream 11 or other kind of such businesses, because they are gaining a lot of traction compared to Nazara. So numbers do not show the same euphoria as it is shown in unlisted players. It is not perhaps one of the best you can say companies in this space in the industry. Although it is, since it is the only listed player, that's why it's getting all the you can say premium that it is having. It is trading at very expensive valuation currently. It is trading at something like 30-40 times, even more than that, sales even after the correction. So numbers need to improve to justify valuations, and there has been very little profits that have come in. Over time, I believe that profits need to come in for the stock to perform. It is an avoid, in my opinion. And the final stock in this list is MapmyIndia, one of my favorite stocks that got listed recently. If I had spare money, I would have bought this stock separately. One of the better recent listing. It provides mapping solutions to corporates all across the board. Now, people talk about Google Maps and why not Google Maps? If there is Google Maps, then what is the need for Map My India, etc. They are providing door to door, you can say, mapping of a particular city, etc. And they have virtually 80-85% of India, including villages, etc., mapped all throughout. Along with that, they provide AI services in terms of what the you can say what the customers would be wanting, thriving for, how is the you can say customer acquisition rate in a particular area, etc., and many other things comes about. It has around 75-80% of the market share, and growth has stalled during the pandemic. It did not do that well, but should do well as things open up. So I believe it has a very low market cap for such a business, which has a margin of over 30-35% and has 80% market share. Currently, around market cap is around 7,000 crores. It is at elevated valuation. Again, it is a good buy between 1100 to 1200 levels. So, in my opinion, Naica and MapmyIndia is perhaps the best of the lot. I have not included stocks like Paytm, Cartrade, etc., because they are just out of whack with respect to valuation. The kind of losses that they are making, they just don't make it to this list. So, kindly understand that. I think 8 to 10 years period, these two stocks could do extremely well. Again, bottom line needs to improve in both Naica and MapmyIndia. Vedant Fashion is also good, but valuations are extremely stretched. I think MapmyIndia and Naica can be bought at these valuation, but invest less amount and leave for a decade. That is the mantra of making money into these stocks. So this was a video on the new age companies. Please like and subscribe my channel, hit the bell icon so you get my video straight away when I post it. Thanks a lot for watching.